market files. In this video we are going to discuss what is a market trend. So market trend is nothing but the direction of the market, the direction in which the price is moving. So there are mainly three types of trends: uptrend, downtrend and sideways trend. Now let us discuss those trends one by one. So uptrend. In the uptrend, the price is moving in the upward direction. That means the price is increasing. Price is making new highs. If you look at this, the price makes this kind of movement, right? So this is the price movement. If you see, this is a new swing high, right? So this high is higher than this high, right? So this high is higher than this high. That means the price at this high is higher than the price at this high. So price at this swing high is higher or greater than the price at this swing high. Also, if you look at the lows, this is called as low, swing low, right? So the price at this swing low is lower than the price at this swing low, or price at this swing low is higher than the price at this swing low. Similarly, if you look at this low, the price at this low is higher than the price at this low. This is called as the market is making new higher highs. So this swing high is higher than this swing high. This swing high is higher than this swing high. Similarly, market is also making higher lows. So if market is making higher highs and higher lows, this is called as uptrend. The market price is moving in the upward direction, right? So as long as this continues, when the new high is higher than the previous high, we are in the uptrend. The market is said to be in the uptrend. The stock is said to be in the uptrend. The price is said to be in the uptrend, right? So when one of the very good way to identify the trend is by using a trend line. So a trend line is a line joining normally in the uptrend we join the lows, right? If I join this low with this low and this low with this low, right? So this trend line is sloping upward, right? So when the trend line is sloping upward, the market is said to be in the uptrend. So in the normally we trend, or the traders trend in the direction of the trend. That means when the market is in the uptrend, the traders or the investors search the opportunity or look for the opportunities to buy. So when to buy? Normally when we have a correction in the price. Correction in the price means when the price falls a little. See, no, market does not move in the straight line. Market does not move in the straight line, right? Always when the market moves higher, it will correct, the price will drop, right? Again the market will move up, the price will move up, and again the price will fall a little, right? So when we are in the uptrend, we look for the opportunity, or we look for a location where the price is making such kind of correction, such kind of fall in the price. We look for that, and we try to buy at this location. We try to buy at this location, right? So that is how we can use the direction of the market to find the buying opportunities. So now let us discuss the downtrend. So downtrend, in the downtrend, the price is moving in the downward direction. That means price is falling. In the uptrend, the price was rising. In the downtrend, the price is falling. Now when the price is falling, you see this is a high. Now this high is lower, this high is lower than this high. That means new highs are lower than the previous highs. For example, here also if you see this high, that means the price here, high means price, the price, see price, this is a price movement, right? The price at this location is lower than the price at this location, right? Similarly, price at this location is lower than the price at this location. So this is called as lower highs, lower swing highs. So when market is making lower swing highs and lower swing lows, so this is a low, so this is a low, this is a low. This new low, because we are moving in this direction, right? We are moving in this direction, right? This is the direction movement. So so that's why this is a new price. So new price at this swing low is lower than the price at this swing low, and the price at this swing low is lower than this price at this swing low. So we say that market is making lower lows, lower swing lows, right? So when such a situation we find, we say that market is in the downtrend. When the market is making lower lows and lower highs, lower highs and lower lows, we say that the market is in the downtrend. So we in the downtrend we search for the opportunities to sell. We search for opportunity to sell the stock or the whatever currency or commodity, whatever. So in the downtrend, we join these lows. If I join these lows, right, so this line joining the lows is called as trend line. This is a we join the highs. So we join the highs. We join the highs in the downtrending market. We join the highs, and this line is called as a trend line, right? And this trend line acts as a resistance. This trend line acts as a resistance. Normal, that means when the price moves down, it it increases or it rises for a while, right? It rises for a while. This is called as correction in price. That means the major trend was downtrend, but during that trend, the price rises a little. So this is called as the correction in the price, correction in the upward direction. That means in the opposite direction of the trend. So this now when we are in the downtrend, we search for the opportunity to sell, and this is the correct place to sell. Right? This is the correct place to sell at the resistance line, right? So in the downtrending market, we search for opportunities to sell. So this is called as downtrending market. So then, what is the sideways market? So when the new highs, this is a new high which is approximately equal to the previous high. So this is a new high which is approximately equal to the previous high. Similarly, if you look at the lows, this new low is approximately equal to the previous low. So when such a situation occurs, market is said to be in the sideways trend. The stock is said to be in the sideways trend. Right? So in such a market, the market is a range bound market. In such a market moves in the channel sort of thing, right? So what traders normally do, they sell at this point and they buy at this point, right? So when the market is in sideways trend, we search for the opportunity to sell at this line, and this is called as the resistance line, and this line is called as support line. We sell at the resistance and we buy at the support, right? So that kind of market is called as sideways trend, sideways market. Now, when what kind of chart we should look at for finding a trend? Normally, if you are an investor, we look at the weekly chart. That is, we look for a long-term trend. We look for a long-term trend, right? When we are an investor, we look for a weekly chart. That means in the weekly chart, one candle, this one candle is of 1 week, right? The price movement during 1 week is denoted by this one candle, right? So that is called as weekly chart. One candle is of 1 week, 1 week. Similarly, if you are a short-term investor or trader, right? That means if you want to buy a stock only for a short duration, like the weeks or months, for example 2 to 3 weeks, or maybe for a month, right? If you are that kind of investor, you look for a daily chart. Daily chart means one candle, one candle. See, this candle denotes the price movement, right? So this one candle is of one day, one day, one day, right? So if you are if you are a short-term investor, you look for, and if you want to identify the trend of the market, you look for a daily chart, right? A chart in which each candle is of one day. So if you are a intraday trader, if you are an intraday trader, you look for a 15-minute chart, 15-minute chart, a chart in which one candle is of 15 minutes, right? So this one candle denotes the price movement during 15 minutes, right? So so depending on what kind of investor or trader you are, you look for, normally this is, in general, this is not fixed, but generally that this is what people do. So let us take an example. Let us look at the, uh, so here we are in the trading view. So this is a Nifty 50 chart. So if you look at this chart, right, if I if you look at from here, this is a daily chart. That means one candle is of one day. For example, if I talk about this candle denotes the movement during one day, during that particular day, right? That means market opened here and it closed here, right? So on that particular day, market opened here and then it closed here. So if we look here, right? If we see here, if I talk about the trend, now if you see during this time, the market from here to here, it's uptrending market. It's in the uptrend, right? Because if you look at this low, right, this is a new low. This low is higher than this low, right? Similarly, if you talk about this high and this high, so this high is higher than this high, right? Similarly, this low is higher than this low. Similarly, this high is higher than this high. So this high is higher than this high, right? So in fact, this low is also higher than this low, right? So then similarly, this high is higher than this high, and this low is higher than this low. That means market is continuously making higher highs, and higher lows. Market is continuously making higher highs. So if that's why we say the market from here to here is in the uptrend, right? So if I join, right, these, if I join this, you see I get a trend line. So you see this is a rising upward sloping trend line. If upward sloping trend line, so that's how I can say the market is uh, in the uptrend, right? So here this trend is broken because this low is not higher than this low. This, in fact, this low is lower than this low. So the trend is broken here. The trend is broken here. The market, but till this point, the market is in the uptrend, right? Okay. So let's see an example where the market is in the downtrend, right? If you see here, if you see here, uh, let me take the better example, better chart. Okay. Uh, yeah. So here, if you see, this is a high. This is a new high, which is approximately equal to the previous high. Similarly, this high is also approximately equal to previous high. So this high is also approximately equal to previous high. This high is approximately equal to previous high. In fact, lows. If I talk about the lows, right? Lows are also on the same level, right? That's why the market is in the sideways. The market is sideways, right? The trend of the market is sideways here, sideways, right? Now, right? So that is the sideways market. Now let's see the, now if I talk about, if I see this here, so if this is a high, this is a new high. This new high is lower than this previous high. This new high is lower than the previous high. In fact, this new high is also lower than the previous high. So low, this is a low, new low, this is a new low which is lower than the previous low, and this new low is lower, right? So the market is clearly in the downtrend. Market is clearly in the downtrend, right? So market is in the downtrend, right? So this is the downtrending market. Okay, so that is how you identify the trend of the market. That is how you identify the trend of the market. So the idea is, so if so the bottom line is, if downtrend, or let me take the uptrend first. If uptrend, search for buying opportunities, buying opportunities. And how do you do that? Normally we draw a trend line. And if the price is moving like this, we try to buy here. We try to buy at the support, right? So that we get the best price, right? So when the market is in the uptrend, we do that. But when the market is in the downtrend like this, when the market is going down, right, making lower lows and lower highs, right? So we try to search for the selling opportunities, right? How do we do that? By drawing a trend line joining the lower highs, right? Like this. We try to sell here, sell at the resistance. This is called as the resistance line. Sell at the resistance, right? So that we get the best price, right? Then when the market is in the sideways, it is better to stay away. And if you are a skilled trader, you can that means if the market is like this is sideways. If you are a skilled trader, so sell here and buy here, right? Sell here and buy here, right? So if the sideways market, right? So the bottom line is, try to trade in the trend of the market. Do not try to trade in the opposite of the trend. Okay? So thanks for watching.